What's going on, everybody? It's Brian Tripp. Welcome back to another episode of the Real Estate Investing Live podcast, where we interview the very best real estate investors, entrepreneurs, and business leaders all throughout the country. And today I'm joined by my fellow Birmingham brethren, Mr. Rob Drum. How's it going today, Rob?
It's going great, Brian. Thank you for having me on here. I'm looking forward to catching up with you.
Yeah. And that's, we used to do a show together. We did the Birmingham area market analysis, and I want to dive into some Birmingham market updates with what's been going on. I think that we have such a big, over half of our YouTube crowd is from the state of Alabama. So I think this is super relevant to a lot of our crowd who watches this. And if you're not from Birmingham or you're not from Alabama, I want to encourage you to stick with us and stay tuned, because Rob might convince you that you should be investing in Birmingham. And he's going to be probably telling you why. So let's kind of kick off and tell everybody what you're up to today. Your brief history. You were a stock guy. You turned into a real estate guy. You got your license and you've been investing yourself, and you help other people invest as well. But what are you up to right now today?
I would say my main day in and day out focus is on building the real estate team, which is a new thing for me. I've been a real estate agent and broker for the last 4 years and sold 200 plus houses. Big chunk of my business came from working with investors, and that's always been really my day job. So I've grown that into a team with now me, 2 other full-time agents. My wife is an agent and is helping us. We've got a full-time assistant and a transaction coordinator. And so leading that team is a new thing for me, something I'm figuring out day by day. And it's been a lot of fun. We really kicked it off in June, was kind of our official first quarterly meeting and kickoff. And it's been a lot of fun. The first quarter and getting started to the second quarter of it has been great.
And you're currently investing too. I know you have a lot of rentals, and I do want to touch on, down the road, I want to touch on the townhome deal that you did. I do want to touch on that. But why are you doing this? Why are you doing the real estate brokerage thing? Like, why are you? I know you're obviously with EXP Realty, but why are you building out a team? Why are you building out your real estate team like that?
Well, I think honestly, rentals are the end game for me, and that's building wealth through rentals that eventually, supports your income needs is the goal. But in the meantime, you've got bills to pay. I've got my 4th kid coming in December, and rentals really don't, and I tell clients this, it goes against all the marketing and all the buzz you hear, but rentals really don't give you a lot of cash flow. You have to have 100 before you really start seeing cash flow that you can eat on month in and month out. And so to pay the bills, and it's fun, you meet a lot of other investors, especially working with investors. It keeps me involved in the flow of the market and the business and connected with everything that's going on.
I love that you just said what you just said about the rentals. And I feel like we're going to title this podcast "The Truth About Rental Property," because what you just said, you're dead on. And you said it goes against the marketing. It goes against what the turnkey companies want to lead you to believe. It goes against a lot of the actual numbers and the data. And you are a numbers and a data-driven person. So tell me what you mean, or tell the folks listening to this or watching this, what you mean by they don't give you the cash flow. Why don't they give you the cash flow? It says here on this pro forma, I'm going to get $300 a month from this rental property, and I got 10 of them. That's $3,000 a month coming in. Why can't I do that, Rob?
So part of it is the small numbers. If you just have one rental and an HVAC or roof needs to be done that month, even if you have up to 5 or 10, it's going to knock out all your cash flow for the month. And
if you only have one, it knocked it out for a year and a half.
Yeah. So cash flow is just one piece of the return schedule coming with a rental. the way I look at it, and the way, kind of the simple way, is that if your tenants are paying your mortgage every month, you have a cash flowing property. Congratulations. And if you have that, you're going to do really well down the road. It's going to be a great investment. And someday you can eat on it. You can feed your kids with it. But that's not for at least a couple years.
Why?
Well, if you've got a mortgage, you've got to pay, for one. And if you're looking at, let's just say, a 6% cap rate, which on a single family house right now is pretty standard. That's a pretty normal cap rate to see out there. And even if you own it free and clear, that's, let's say it's $100,000 property, that's $6,000 a year. So depending on what your needs are, I mean, you probably need a couple of them free and clear. And if you've got mortgages on them, that mortgage is going to eat up pretty much the whole, by the time you pay 4 or 5% interest plus pay down the principal, think about it, like that's put a little bit towards the principal, that's paying down your mortgage, but it doesn't leave that money available to spend.
And you've got taxes, you got insurance, you got a property manager, you got to probably hopefully pay if you're doing this for the long haul. You got a property manager, you've got expenses that are going to come along, like hidden expenses that you're just not going to prepare for. What if it goes vacant? What if somebody tears up the property? You got a big turnover. There's a lot to single family residences that people don't talk about. And I don't think you're saying this because you own them, and I've owned them. I've owned tons as well. I don't think you're saying that it's bad to do it. It's just, let's look at and see when we're going to be anticipating getting the return, because it doesn't sound like it's going to be right away. Yeah.
I would say the exact opposite. I think it's the best thing in the world that you could possibly do to build wealth. It's by far, I think, the greatest investment I've ever seen. I don't invest in anything else. No stocks other than EXP stock that I get from the brokerage, no crypto, and just invest in rental real estate. And I think it's the greatest thing there is, but not for the reasons that a lot of people market and tell you it's great.
There's just so many hidden things that can happen. You're mentioning like a CapEx expense, a roof, or something happens, that you've got to have such a strong reserve account to hedge these issues. But the reasons you do it are
the appreciation, which I think if you own a portfolio of rentals, you've seen over the last year, 2 years, with 12% plus appreciation. Let's say you bought a property with 20% down right at the beginning of 2020. And from there, you experienced 12% appreciation. You know what your return is, return on investment, just off of the appreciation for that 1 year is?
12%? No. Help me with the math.
So as you put, let's say you put 20,000 down and your property appreciated from 100,000 to 112,000. That's 60% return on your money that you put down, just off the appreciation, just off that 1 year, not including cash flow, paying down the mortgage. So that's, where else are you going to find that?
Cash flow, paying down the mortgage, the appreciation, and then the tax benefits as well.
Yeah.
You can write off on these properties that are about $100,000 price point that you're talking about here. You almost get to write off the entire amount of net cash flow as completely tax deductible. So it's almost completely tax free. So lots of benefits to owning real estate. But I love the way you put that, because I haven't really talked about that. It's delayed gratification. Let's get, so well, let me ask you this. Do you recommend getting them paid off, or do you recommend, some people say, hey, refi till you die? Because you can refi them tax-free money.
Yeah. I would fall more in the camp of refi till you die. But really, I mean, I think over time, I'll probably end up somewhere in between, where you don't want to be 80% leveraged forever, but I definitely don't have any desire to have them paid off.
Why?
Uh, a couple reasons. I mean, free and clear properties. One, so tax inefficiency for one. You know, if you have all that, let's say you have that 6% cap rate, you've got the property free and clear, and you're collecting that cash every year, and it all works out, and you've got your cash. You're paying taxes on it, which is inefficient if you had a loan against it. So let's say you just borrowed against the appreciation, like you said, that's tax free. It's also, if there was a situation where a creditor was coming after you, all of a sudden they're looking at fully leveraged properties where if they sell, they might get some money, they might not. They're not looking at a target where they're, you know, a big well of equity that they can just liquidate this property and collect. So it's a little bit of that, a little bit of the tax efficiency, also the returns that you're achieving, with appreciation being a significant a part of that return equation. It makes sense to have some leverage, even if it's 50%.
So let's talk about Birmingham, Rob. The majority of your properties that you own, if not all of them, are at least in greater Birmingham. And obviously I think a lot of that is out of convenience, and you know the market really well. We are taught to invest in what we know. We know this market really well. It just so happens to be that Birmingham is an extremely strong, if not one of the absolute strongest cash flowing markets that exist out there. Give us some data, back up what I just said, which I know you would agree with. I think you would agree with. What makes Birmingham so attractive for investors, not just people who live here, but so many out-of-state investors that are piling in, and out of the country investors that are piling into Birmingham?
Yeah. So I started in 2017, and it really feels like every single quarter since then, we've seen more and more out-of-state investors interested in our kind of rental areas. And those areas have also progressively gotten more and more competition, tighter competition to buy those properties. When I started, a lot of them would be sitting, a lot of them would be selling $10,000, $20,000 below the list price when they did sell. And where they are now is they're still not quite like a retail area where the best schools are and those type of areas, but most of them are probably selling at list or very close to list price, and in some cases getting multiple offers. Anything that's a potential project is definitely getting multiple offers. And I think Birmingham is attractive from a cap rate standpoint. There's a lot of investors I talked to who have invested in like an Indianapolis or a Memphis, and couldn't get the cash flow numbers that they were seeing there. And so they've rotated into Birmingham. More and more people are coming from Atlanta. And I think really the revival of downtown Birmingham is having a great effect on our kind of buzz for our city, from a investment standpoint, that a lot more people are giving us a look because of that too.
Yeah, and with it being kind of more of a secondary type of market, Birmingham's not really a place that people are typically thinking about. You mentioned Indianapolis and Kansas City, even Memphis has become pretty famous, mainly because there's a big turnkey company that's there. But even places like Dallas and Houston, and you mentioned Atlanta, Charlotte, these are areas where, when I think of, a Tulsa, Oklahoma City, these are places I think of that are kind of on the national scene when it comes to turnkey investing, or investing in these, probably $100,000 properties that are going to get you a solid rate of return. Birmingham is slowly becoming or getting into that conversation now, is it not?
Yeah. I think so. I think we still have properties that you can buy, say that meet the 1% rule or get close to it, that are in great neighborhoods and, safe neighborhoods with pretty good schools. And so we still have all those things available up until last year. For under $200,000, you could get into a neighborhood that's like hot, where all the first time home buyers want to buy.
Hmm.
It's tough to get into those under 200,000 anymore, but that was kind of I felt like that was maybe the best deal in town.
Hmm. Let's talk about that for a second, because I think that that's interesting. Even in 2017, when you got started, things have shifted quite a bit in Birmingham. I think of turnkey real estate in Birmingham specifically. We're going to get a little granular here, and for the folks who are really interested in this kind of stuff, you're going to want to pay attention here. You talk about like a Center Point and a Huffman area. You talk about a Hueytown, a Pleasant Grove, even. These are kind of like the hotter B kind of areas where people wanted to be. This is 5 years ago. Where are people today, Rob, kind of gravitating to where they can get a strong cap rate, you just said great, safe neighborhoods, decent schools, they're still getting good cash flow. Where are these places right now in Birmingham?
Yeah. So I've seen our clients buying, really going into a little farther past Forestdale to the north into Graysville has been a pretty popular area. Been kind of moving inward in Eastlake and Inslee. Eastlake to the east, Inslee to the west. Those have been really popular, and there's a lot of retail type renovations happening in both of those neighborhoods as well.
Which has not been the norm.
No, that's pretty new, and they're doing well. I mean, flippers are doing well on those, and so that's driving prices up in there. And I would say that's definitely a shift. I think that'll continue.
We want the scoop right now, Rob. We want the scoop. I want to buy. I want to come. I want to use you as my realtor. I want to find some investment properties. Where's the growth? Where are the good returns? Maybe some areas that people don't know. They know, but the people that are here, they really know. Where are the areas that we should really be looking at right now, Rob?
I would say that probably it depends on which kind of class you're looking at.
Well, let's do that.
Price range.
Yeah, let's start. Let's go 200,000 up. Let's call that A class. This is just me being subjective here. 150 to 200 is B, maybe 125 to $200,000 price point being B class. Anything under 125 being C class. Let's maybe give one or two for each one of those levels.
Yeah, so I would say in the kind of A area, and this is just like two general areas, the Helena, Pelham, Alabaster, like the southern suburbs that have a lot of newer built homes. That's kind of our bread and butter for clients looking in the 200-ish range.
And what can people get? What could be your clients? What do they expect to get for a $200,000 property that's outside of the main county? It's south of the main county in Shelby County. For those that don't know, what can they expect to get return wise? It sounds like a little bit newer of a home.
Yeah, it's usually going to be a home that was built around 2000 or post 2000, and in general, you're looking at a house that's you can buy for 200 to 215. Will rent for about 1,500 to 1,600, maybe even a little higher than that. So, and another thing that I would point out that isn't really discussed in the kind of marketing of turnkey rental properties is that as you go up in price and rent, the 1% rule of thumb doesn't really play out the same. So we've done a lot of those $200,000 houses that rent for 1,500 back in the spring, that they're paying their mortgage plus a little bit more on their rent. It just the numbers don't work out kind of that rule of thumb way that they do with the $100,000 properties.
Okay, so take us through the B class now. B class properties. Where would you direct people? Where's the up and coming areas here in Birmingham?
Well, Hueytown's been on that list for a while, but I would say there's been a lot of acceleration of interest in Hueytown because there's so many things that are kind of popping up on the west side of the city, the Bessemer type area, with Amazon and other big manufacturers, big businesses that are coming into that area. I've had some really competitive listings in Hueytown in the last year. Multiple offers going above list on probably all of them, if I think about it. So that's a hot area. That's still in the 100 to 150 price range.
Mm-hmm.
Definitely like that one.
And the rents I can for 100 to 150,000 in Hueytown, I can expect about what for rents?
For, let's say you get a 3.1.5 or 3.2 there, I'd say 1,100, 1,200, that range.
And these are typically brick houses in Hueytown. These are typically pretty good, solid houses in pretty solid area.
Yeah. Good flat lots, built. Some of them are a little older, in the maybe 1950s to 1970s. Mm-hmm. There's a lot of 2.1s in Hueytown, but those have really sold pretty well too. They're usually selling more specifically to investors, but they have good numbers on them a lot of times.
In that C class range, I know you mentioned Graysville and Inslee. Would those areas kind of fall into that?
C, I would say at this point, anything that you can buy under 70, under 70 or 80, I would probably put in the C area. It's definitely shifting. Prices on those have, from a percentage basis, have probably gone up the most.
But I want to stay probably around the $100,000 range, and I want to stay in a pretty safe place, in a pretty good, solid area. Where would you recommend if I'm going to say kind of C plus-ish, B minus C plus area?
Yeah, I would say the southeast side of East Lake towards Ruffner Mountain is an area that would be good to buy. We've got a couple clients that have bought multiple in that area that are still better than the 1% rule. I would say Inslee, near Bush Boulevard, there's some sections that are really nice and kind of coming along. We've done a couple portfolio sales in Tarrant that Tarrant's really, prices have gone up a good bit there in the last couple years, but it's also, those are still selling in the 50 to 60 range. So if you kind of go towards the bottom of that, we've seen some of those sell.
Well, and in Tarrant, it's funny you mentioned Tarrant. Tarrant has a new mayor. If anybody doesn't know this, Tarrant used to be just a place no investor wanted to go because the government, the laws, or the ordinances, I should say, were just so anti-investor. And a lot of that is changing right now. And Tarrant is about to start making a big push for investors, laxing on a lot of these ordinances and rules. So that might be an area to look out for in the future. Rob, is it too late? Is it too late? It's towards the end of 2021 right now. Is it too late to get involved, to get started real estate investing in Birmingham?
No, I don't think so at all. I think that there's more and more, like I said, there's more and more every day. There's no sign of the investor interest in Birmingham slowing down. There's more and more new developments in new sections of the city money flowing in. And I think, Brian, you've been here a long time too, but so I graduated college in 2010. And when I came back here, downtown was not really a place a lot of people went out. No one came back from college and, moved into a condo or loft downtown or a big apartment building. Just really wasn't a thing. And you see a lot more young people coming back from college, moving in downtown, enjoying the restaurant scene and the bar scene and everything that's the music scene, everything that's popping up here. So the kind of urban renewal that you've seen I don't know if you put it on the same level as like Nashville or Austin, but those were kind of sleepy cities 15, 20 years ago. And you see some good things happening here for sure.
Yeah. No, it's really interesting. There's no doubt Birmingham is definitely on the rise. And I think a lot of places across the country are, because there has been so much money being pumped into the economy and infrastructure. You're sitting here talking about the entire, where I-65 comes through and I-2059 comes through. That entire area was shut down for almost a year and a half, almost 2 years, just to redo every one of those bridges. So people actually can go downtown pretty easily now. Brand new stadium downtown for UAB football and for other things. The World Games are coming here next year. So a lot to Birmingham. You mentioned Amazon, lots of different car manufacturing all throughout and around the city. So there's a lot of attractiveness to Birmingham for out-of-state investors. Rob, that's kind of what's your bread and butter. Obviously, you're investing too, but your bread and butter right now is you're working with investors who are coming in from out of state, looking to find rental property. You know where the hot areas are. You know where to stay away from. What are some of the maybe the good and the bad, some things that your investors that you've worked with that are seeing that are really working well for them in Birmingham, and some things that are just, hey, you know what, here's some stuff we're seeing, let's avoid this?
So I would say really the biggest thing from an out-of-state investor's perspective that doesn't get talked about a whole lot is that you don't really want to buy the property that needs a lot of work, because you're getting the worst price you could possibly get on that work. It's going to be, you're going to find, if you want a good contractor, you do want a good contractor, and you're going to have to pay for it. And you can't be there to oversee anything. The contractor has to have a level of trust with you to accept payments from an out-of-state owner. They can be kind of skittish about that. So you really want something that, and we kind of mitigate that. Properties, a lot of times they do need work. The property manager that we talk to every day, we work very closely with, they can handle all that. But you really want something that's at least close to being rent ready. If it needs some paint, carpet, fixing, a leak under the sink, things like that, that's all fine. But you really don't want to be moving walls around, trying to add a bathroom, things like that are usually not going to be cost effective for you.
And I'm glad you touched on property. You mentioned property management, because I wanted to touch on that before we left. Property management seems to be a really tough thing to, especially if anyone's watching this or listening to this and they've had property out of state or not where they live. You know how challenging management can be. What are you seeing right now are some of the biggest challenges for property management in general for Birmingham specifically?
I think we really weathered COVID pretty well. It's always a challenge, especially when you get into the B and C properties. They don't just manage themselves. Like an A-type property is going to be newer and have a tenant with probably credit and a job that pays well, and the B and C don't always have that. Sometimes there's Section 8 payments, which is a whole nother entity that you have to be able to deal with. And maintenance on those older homes is always an issue, to know what you need to do, to know what is just a tenant being a little too picky. And so I've really been blessed for my properties as well as my clients. We've got a property manager that's been with me pretty much since the start, and we've grown together. And so it's a huge part of it. I could not be, there's no way I'd be where I am without him being in the equation.
Yeah, and guys, stay tuned because we are going to do an episode here in the very near future with said property manager that Rob has been referencing. We're going to do a whole show with him and his company and how they've grown and how they really do it right. And there's so many management companies that are right here in Birmingham. And it's, some of it's their fault, some of it's not. A lot of it's not. A lot of it's just it's older homes. A lot of these homes, a lot of these rental homes are built in the 60s, 50s, and 60s and 70s. And it's just a lot of maintenance, a lot of stuff that you have to kind of navigate. So a lot of it's not their fault, but some of it is. And so we're going to talk to the property management because you need the whole piece. You need a great realtor like Rob, but you also need the management piece once you have actually bought the asset. So Rob, I know that you're the only person I know who's doing this in Birmingham. You put out a weekly newsletter talking specifically about what is working right here in Birmingham, talking about the numbers, why we should be investing in Birmingham, and maybe some reasons why we shouldn't be investing in certain areas. Rob, where can people sign up for your free newsletter?
Yeah, you can go to robdrum.us/subscribe. Or you can look on YouTube and subscribe to the channel. It's just Rob Drum is the channel.
Okay. Guys, we're going to link all that up in the description and the show notes. Make sure you go right now to the description, click on the link that takes you to robdrum.us/subscribe. And if you are at all interested, if you have property right now in Birmingham, or you want to have property, even if you never use Rob, subscribe to this newsletter. It's incredible stuff. I know you've been consistent with this for years now, 2 or 3 years. So, guys, this is something. Rob is a data guy. He is a data-driven person, and you want the numbers. You want to know they're not just theory. You got to go subscribe to this newsletter. So we'll put that in the description below. Rob, thank you, man. I appreciate your time, and I appreciate all the knowledge that you dropped on us, talking specifically about Birmingham area real estate.
Yeah, thanks for having me, Brian. I enjoyed it.
Awesome, guys. Hit subscribe right now. We've got some incredible videos coming out, some incredible new shows coming out for you all to have along your real estate journey. We love you guys. We're going to see you very soon.